is not your IFP or ACA contract. It is separate from that to be able to to be able to sell ancillary and non-ACA under 65 health insurance products. So before we get started, I do want to share with you again a touch on our core medical product options that we have today. That is a tri-term medical, tri meaning a 3-year product. And then we also have a short-term product. These products, when you talk about ideal customers, just to find out if you have opportunities for this type of product within your business, they're typically meant to bridge the gaps in coverages that they have. Maybe it's bridging someone to the ACA open enrollment. Maybe it's between employers, or if they've started at an employer, they have a 30, 60, 90-day wait period for group benefits. Big thing I've seen happen over the last 4 years has been early retirees, consumers who are retiring much earlier in life and then are looking at COBRA as a health insurance option, and that can be very expensive for some individuals. And then bridging clients to Medicare age. That's typically what that gaps in coverage really is referring to. But other reasons why they would want to consider this United Healthcare core medical option is as it relates to ACA. Maybe they can't afford ACA because they're getting little to no ACA premium subsidy. They just deem ACA to be too expensive, so they're looking for a lower cost alternative. And when I say can't access ACA, typically it's because they're not in an open enrollment, they do not have a special enrollment period or a qualifying life event. And then all too often, it is related to network. Yes, maybe they can access an ACA plan today, but they can't access their providers. All too often in an ACA plan, I see it being an HMO or EPO network, which sometimes does not provide access to the doctors they want to see or hospitals they would like to preferably use. So that would be a situation where they would want to consider this national network that United Healthcare has with these 2 core medical plans. It's the largest network in the nation. And then lastly, it's for national presence. So with an HMO or EPO network, typically they're state-based or geographically based, and so they might not be the best option for families who have out-of-state college students, those that are snowbirders, full-time RVers, maybe those that travel a lot for work or pleasure and are out of their home state often. That would be another reason to consider United Healthcare's core medical plans, tri-term medical or short-term medical. So just to quickly share with you that tri-term option that we have, medically underwritten. It is a 3-year plan that covers pre-existing conditions after a 12-month wait. Kind of knowing our audience as it relates to that tri-term product, it is typically for those consumers who are above the 400% of the federal poverty level. And so what we did is we grabbed the US population to determine what part of the US population fits this tri-term niche. And you'll see here on the pie chart, almost 35% of the US population fits in that over the 400% of the federal poverty level. So great option for those individuals. We see a lot of self-employed individuals on this plan, insurance brokers like yourself, real estate agents, consultants. And then on the right-hand side, what we did is we took a breakdown of the states that we offer tri-term medical in to also drill down by state what part of the population in that specific state falls in that B above the 400% of the federal poverty level. Big states for us are Florida, almost 36% of the population fits our niche market. Texas, 37%. Arizona, 36%. Those are just some of our top selling markets. So again, tri-term, it's a 3-year product. 3 continuous years of coverage. South Carolina is only 33 months. So the states that you see in blue on the map are the states that have tri-term. It is the best non-ACA coverage out there today on a traditional health insurance chassis. What I mean by that is deductible, co-insurance, and a stop loss feature built within the product. Does cover pre-existing conditions after 12 months, and our best-selling plan has a 4-tier prescription benefit in it. This is the snip right out of your product brochure that you have access to today, or when you become appointed with us, you would have access to. There are 4 different plans within the portfolio, but really our best-selling plan is that Copay Select Max plan. I think it's because it's a cheaper option for them, as well as giving them copays prior to their deductible. You'll see the deductibles range from $2,500 to $12,500. The co-insurance is preset to 70/30, whereas their 30% would be an additional $4,500. So if it was a $5,000 deductible, $4,500 additionally in their co-insurance, so a total out of pocket $9,500. But again, the appealing aspect to this is the copays prior to deductible. Every insured on the plan would get $50 copay for their primary care and specialist for the first 4. Subsequent visits, being their 5th, 6th, 7th visit, would be covered. It's just they're subject to the plan's deductible and co-insurance. Urgent care visits, $75 copay, unlimited, as many times as they want to use the urgent care, unlimited. The other thing with the urgent care is it's all inclusive. So if somebody were to go to the urgent care for bronchitis, they have a chest x-ray and their visit, that would be all $75 to the consumer, so long as all services are rendered in the same facility, come to us on the same bill by the same taxpayer ID. Now, on the flip side, if they were to go to their PCP for bronchitis, they would have a $50 office visit copay, but that chest x-ray is going to fall under lab and x-ray, and it's going to be subject to deductible and co-insurance. So it is more advantageous to a consumer to utilize that urgent care copay because it's all inclusive. All other expenses on the plan, you're going to see emergency room, hospital services, outpatient surgeries, lab and x-ray. They're all covered deductible co-insurance. Preventive care does have a $50 copay to the consumer. And then at the very bottom is our Tier 4 prescription formulary. Tier 1s would be a $25 copay. Anytime they're using Tier 2 through 4 drugs,